Hey Sean, I don't know if you talking or not, but I'm not hearing anything.
No, I was still muted. I'm about to unmute in a second. Appreciate you though.
Okay, cool.
All right, so this is our advanced class. So I think I did I start recording already? I think I did, yeah. All right, so this is our advanced class, and we'll be covering some of you all already know a decent amount about the trigger time frame, but we'll still cover it. But also make sure that while you're on the call, that you ask whatever questions you have. That makes it better for everybody on the call 'cause since we all using the same system and the same Discord alerts and confirmations, and for the most part, even if you're using different techniques, the real purpose behind a wolf chart is to automate some things that normally people would get stuck at. They don't know how to draw out a chart, and so people would get stuck there, and then they really can't even proceed to the rest of learning how to trade in the stock market. So the wolf chart just basically solved that, having to draw every support and resistance line out for every single stock you go to, stuff like that. So it could become whatever type of chart you want. Right now, in this infant stage of the wolf chart, I'm showing you all how I trade my confirmation system to get in and out of trades. And then, from there, as you grow as a trader, you may see some things that you want to add. You may see some things you want to take away. But just like any successful franchise, and really, to be honest with you, I say men versus women. Men, this right here is more something that I guess will go toward men. That men naturally gonna like to innovate things. It's like almost the same type of mindset when you get a box from Amazon, and it's like put this together, put this crib together, and you just throw the instructions to the side and you just start kind of like screwing stuff in and things like that because you can figure it out. That don't work with the wolf chart. So so a lot of times you'll see, women kind of taking it and running because most time a woman, she's gonna sit back and she's gonna read everything. Make, and there's some men like that as well, but for the most part, they're just gonna take you at your word on the instruction. Like, okay, it said do this, then when this happens, then do that, and then wait for this. That's pretty much how they're gonna move. But a lot of times, uh, as a man, you will you know, okay, we got the wolf chart. I mean, this right here, all right, and you immediately start adding other things or taking stuff out, and then you'll look up and be like, well, hold up, man, why everybody kind of passing me up or taking off and they're making better progress than me? That tends to happen when you try. So this right here works like Chick-fil-A. This is a franchise type mindset. If somebody going and got a Chick-fil-A and you run Chick-fil-A like Chick-fil-A is supposed to be ran, you're gonna get Chick-fil-A results. But if you go get Chick-fil-A, you like, I understand they say my pleasure and they do this right here and they do that. But I'm gonna kind of have my a little bit more freestyle it a little bit and I'm gonna season my chicken nuggets a little bit different. I'm gonna put, then that's you're not getting the type of business that Chick-fil-A get. And it's because you know what I'm saying, like you gotta kind of franchise it first and then see the gap. So a lot of times you'll pull up the different Chick-fil-A's and then you'll see them always fine tuning their process to make it more efficient and make it better. That's how you have to approach the wolf chart. You're like, okay, damn, like the confirmation system did this, but for some reason when I get into it after the inverse arc, the stock will always pull back and it feel like my timing is off. And then next you know, it'll take off. And then now I done got, frustrated and got out the trade, but now the trade has went up and now I'm not in the trade no more. So how can I time that better? Or what can I add to the chart to get my timing down? Stuff like that. So that's how you want to kind of season the wolf chart. It's kind of like, okay, I'm following everything by design, but if it had this, then this would improve You know what I'm saying? I feel like this would improve it. So, and I have a lot of wolves like that that are at that level where they'll see something in the chart and they'll say, hey, what if you did this right here? I think that'll help. Or what if we did this? And then I'll go look at it. And when I do stuff, I back test it like heavy. So when I say I back test it inside of TradingView, they have things called strategies you can add to the chart. So the reason why I know what the WTMA is and what it does and what its purpose is because when I run a test on a WTMA, it goes and tests the WTMA from 1990 all the way to the current date, and it looks at every time we got an inverse arc, what's the percent of the time that the stock appreciated in price from an inverse arc in an upward direction according to what the confirmation says, and hit at least one ATR. You know what I'm saying, from that daily time frame or whatever time frame I'm testing. And then I would know, okay, 84% of the time when you get an inverse arc on a daily time frame, a upward trend will proceed, proceed at least one ATR, you know what I'm saying, from the inverse arc, right? And so and it's looking at within like a 12 to 20 candle thing versus and it's saying, okay, versus it being invalidated basically, versus it dropping down and hitting a stop loss one ATR or 1.5 ATR under it. And
Hey,
so
Sean.
yeah,
So right here with what you saying, one ATR, you is that basically like one of the targets that's in the ATR tracker? Is that what you mean by going
yeah,
one ATR?
yeah. So ATR, let me pull up the what is that? Hold on. That's the new one. Hold on. Let me remove this one right quick. This one. Yeah, so an ATR is just saying so every time frame has like if I go to the what is this? I'm on a crypto. So let me go to Apple right quick. So we're looking at Apple. The ATR tracker um is worth a class in itself, to be honest with you. And so I'm gonna have to start. I taught it in depth, you know what I'm saying, in the past, but I'm gonna have to, get back in it and teach it more. But the ATR tracker is this is like the thing on the chart that helps you out. I mean, it's only second to probably the WTMA when it comes to I'm saying like helping you out as far as where you're making money or losing money because of these targets and then the stop loss and stuff like that. When you're dealing with avoiding getting into a stock and then it getting swept out of position, it's all based off so stock. The smart money uses the ATR of a stock, you know what I'm saying, and they push price around in that range. But they're like no matter how much weird stuff they doing, these candles gonna still average out and give you a ATR per time frame. So like right here, looking at this ATR of the past 14 candles, sometimes 14 to 12, I think on this ATR tracker, it's looking at the previous 14 candles and saying on the daily time frame, this is a 2 hour. So we just talk about 2 hours. So on a 2 hour chart, Apple's ATR average true range that it will move each candle, a 2 hour candle is possible. It can move $3.48. So if I was on a daily time frame, and this is also help you not to chase some things when you see a big gap up in a stock. So if Apple was to gap up, for example, tomorrow or gap down or whatever, and you know that it can move almost $9 in a day, and say it gaps down and the market opens up and Apple is down $8.78, right? Say if it just crashed like that, it opened up down $8.78. And if this right here is just set to low, like a normal green, unvolatile stock, like let me just click on anything and see if I can find like a regular. That thing. Oh, I'm on a top movers list. That's why everything is aggressive. Hold on, right quick. Let me just go to a regular stock. So we just go to like a regular stock, and you see that. Let me see if I can find one that's not aggressive. You see how it has volatility status, low volatility. All right. So if Apple's gap down and then, or say Netflix, if we don't hear it, they gap down tomorrow and they're down $2.15 and they push down some more and this stays at low volatility, that means that Apple's going to push down its full ATR and it's probably going to reverse back up or it's not going to give you no more downside because it's already reached the average move that it can make in one direction, right? And now it can push back up to the opening candle's price and go up $2 above that, right? But as far as making that push down from the opening price, if that volatility is low, it's not going to do much. And then you will pay attention. The ATR tracker is going to always tell you when it's payday. And when I say pay, I'm talking about for my day traders. This thing is going to flip to aggressive, and it's going, especially if it flips with the momentum turned up as well. You will see some big moves in the stock, but a lot, almost all the stocks that's going to be moving are going to have that ATR tracker flipped off a low volatility. Like Nvidia is able to push through supply because the ATR tracker is showing you, okay, the actual daily range that it can expand and the candles can move is actually getting bigger and bigger, right? So like if I come down here when it was compressing, I'm not sure this candle right here probably had it pushed up, but we go into replay mode and we come back down here where it was compressing at. Let's go look at it. So it was at $7.53, and we saw that it's already, it's moving up pennies, but it's still constantly increasing how much it can move in a day. And so if we look at something like AMD or MU, like MU had a huge ATR not too long ago, right? So now it's at 83. It's still pretty high. But if you look at some, I'm not sure how much it was when it was dropping down over here, but we'll go look. But you see how MU is low volatility, and every time it's pushing up. In recent times, it'll push up, but every time it pushes up, it's having like it's giving it all back, right? So it's not able to sustain that big move or that like it was doing at first. I'm just trying to see how it moved around. I just want y'all to pay attention to how this ATR value is increasing as the stock is increasing. So now, so at first it was like at 90 some dollars right here when it started pushing up, but like recently, if we look at these candles on MU, you see how we're in this like compression right here. Everything's kind of in this little range, and we have this low volatility. And so you will know when MU is going to, like when it starts breaking out and you start seeing the ATR tracker flip to aggressive, and you will start seeing this number will start increasing to like, okay, now it can move $84 in a day. And now I can move $92 in a day. Now I can move $102 in a day. You'll start seeing this number up here increasing while this is orange and saying it's aggressive. That means that it's real money and volatility pushing the price up in a sustainable way. And so a lot of times when you see a stock going on like a big run, a big breakout, you will see it not only flip on you'll see it not only flipping on a daily time frame. The one hint you will get, especially if it happens like on Tuesday or Monday, if you flip to like the 1 week chart, and you will see that the stock will be on aggressive on the weekly. And so like with Shopify, for example, I think its ATR flipped. I saw somebody else call it out, and I went and looked at it and called it out as well to put it on notice in case somebody missed the person in the wolf pack. They called it out when it was around like 129. And then I looked at their chart and I said, man, they have an empty VRVP over here. So it's nothing, it's like an empty vacuum. So once it hits above this level, it can just take off. Right. And so you see how that is aggressive. And then so if I go look at them on a monthly chart and see if they're aggressive with a monthly candle, it's possible for them to maintain this type of pressure and keep trying to push up. Now, the only reason they stopped is because they ran into liquidity right here. So they're at target. But you can see like once they break and retest, 154, they can try to prepare to push to like 163 and keep going up. And then they have on a 1 month time frame, the inverse arc is trying to get ready to form on the 1 month chart. I don't know what this is on my chart. I think this is AYN doing this. Let me go to the settings. Yeah. All right. But anyway, so that ATR tracker will really help you to understand when something is trying to pay you. And you can just think about any of the stocks, and that's why the power of this top movers. You see how if you click on this little target symbol right here, it'll throw your screeners. Like it'll put your screeners on this side over here. So if I go like the Pine script, for example, where I will be coding, but if I come back and hit this little target, you see how I have my top movers sitting right on the side of my chart. So if I'm trying to day trade and I'm looking for stuff that's moving for a day trade that's favorable for day trades, I can easily get through and be looking at all the stocks that's willing to be day traded right now that's in a good position. And so when you combine the biggest paydays you will get is when you're in an A plus trade setup and so we know when we're in an A plus trade setup. Why? How do we know when we're in an A plus trade setup? Like how will you as a wolf when you look at the chart and you say, okay, we got an A plus trade coming up. How do you know when it's an A plus trade? Anybody can unmute. But coach gonna make y'all talk on it, call. So y'all gotta just shoot out an answer. It really don't matter. You don't have to overthink it. Just you've been trading long enough. So what's an A plus trade to you?
I
I
look
would
for
say
gaps.
seeing what's that, the inverse arc on like a bigger time frame. If I'm
Okay.
seeing like it close on like a weekly and it's has the inverse arc and looking at the 12 and the 200. So I definitely since that last training that we did, uh I've been paying more attention to trying to just read the chart and not trade with my heart, so to speak. Because it's like a lot of times I feel like I be looking at the chart, I'm like, oh, I think it's great, do this. Like it's not really a thinking thing. It's just look at the chart, read the chart how it's supposed to be read. So if it's above the 200, that means overall it should be bullish. If it's above the 12, the short term is bullish and just kind of go from there. So, but that along with a inverse arc on a bigger time frame would make the trade seem like a A plus trade to me.
Okay. Who else got one?
I look for gaps, low volume gaps. Obviously, yeah, the confirmation system, but along with the confirmation systems and inverse arcs over the 12, above the 200 or below, depending on what you want to trade. But that's what I look for. I look for those ranges where I see big gaps in our levels with our wolf levels, the gray lines, but also big gaps in volume. And
Hmm.
if it's day trading, looking at your pre-market course and the cloud is very helpful. I look for that 12 to mount that cloud. A couple weeks ago, we were talking about just being a little quiet, and I got a piece of ACN, but I didn't I didn't know. I was looking for it to pull back to like the 147, and I didn't know to hold my swing trade long enough. It hit my level. I was out, but yeah, definitely one that I missed out on, and I could have got more out of it.
Anybody else want to add before we proceed? All right, so let me show you guys something right quick so we can get a clear understanding. And this will help you, what I'm saying, when it comes down to identifying A plus trade range, because what you all just said is everything you need, what I'm saying, to identify one. But the most important thing is you want to see confluence in these gaps in the chart, right? So first thing we want to look at, I'm gonna turn off the wolf chart, right? And I think I got the wolf chart on here twice, maybe, possibly. Right. So anyway, we'll turn off the WTMA Cloud, which it is a part of it. I'm gonna turn off my liquidity map. Oh, that's where my WTMA is coming from, the liquidity map. All right. So I'm gonna turn back the wolf chart back on. All right. So now, if we just focus on, we're not gonna look at the WTMA. We can keep the cloud on there. We can turn it off too, because we gotta get. I want you to all have a clear understanding of the components you need to be paying attention to for the A plus trade part of the evaluation. right? Which, like you, nothing you said about the trend or anything like that is incorrect as far as knowing that it's an A plus trade. But when you're looking for the A plus trade range, when you start licking your chops, like, hey, this is an opportunity for me to get paid on this move. It's all coming down to these type of confluence right here. If I took all my moving averages off the chart, right? And we're looking at structure and we're looking at where liquidity is and where, more importantly, the lack of the lack of volume, the lack of any kind of resistance or support, obstacles in the way. These things create these empty voids in the chart. And those ranges are where the money is. So even if we went and pulled Palantir's chart back to pull in more data back to this level here, Palantir was always going to make this big move if it had good earnings or whatever. As soon as it got in this range, look at this. No volume here. No volume here, right? Even this little gap here. And when you see with this VRVP, whenever you see these low nodes over here, that means that this is like if the stock was dropping and it dropped down in this range, it's going to drop $16 to $20, right? If it's pushing up, it's going to push up $16 to $20 when it gets in this range. And if you don't believe me, we come over here and look at the same price action. Every time it gets in that range, it's going to explode up and it's going to drop down. It's going to explode up and it's going to drop down because there's a lack of market participation in this price range. These are your A plus trade range because you don't have a supply zone right here. You don't have anything here. Like, for example, if Palantir dropped for some reason and it closed under 152, it's at risk to dropping a $10 to $12 drop, $15 immediately in this range, right? And so when you're looking at an A plus trade range, and when I get excited about a trade, it's because between these historical support and resistance lines, right? My order blocks and then the volume, when they all have the same gaps, like here, right? You see how Palantir, this VRVP is dropping off. That's like it's just showing you that the higher it gets over this price, the easier the move is going to get on Palantir. It's not going to be like being down here. You see down here, look when price pushed up into this range. If I draw a box over that VRVP and I grab this range right here, just where the nose are sticking out, right? And I grab this and pull it over here. You see, that's where all the chop is. But look what happens when every time you break out of that range or you break under that range, that's easy money. Easy money, right? This is the easy money. This right here is where you want to say, okay, let me sit back. Let me build a trade plan and see what level need to break above. But once it gets above inside of these little gap areas, that's where your money is. And so when you start being able to identify your WTMA and your 12 cloud is going to tell you the trend support, right? But you can have your WTMA and your 200, you can be above all those things and pushing it into a very choppy range and still get stuck, right? So, for example, Dell is in position, right, to where it can make some easy money. But under this range, you see how if Dell ever got bearish and it started holding under 405, it's going to crash down fast. So it'd be a great put opportunity up in this range, right? And so if you go look and evaluate a lot of these stocks and think about that type of confluence, right? And the way you line this up is go back to let me look at something that's probably about to break out into one of these ranges. So when I'm lining this up and looking, so if I even just looked at if I pull my chart over to the side, I'm trying to get where there's no candles at. This is what you're looking at from the support and resistance level. Big, huge gap between your resistance and your next level, right? That's a big gap. So sometimes when you see me with trades and I be up at like a huge percent, it's because I've seen a gap like this and the VRVP is in agreement with the historical support and resistance. So I know that from 188 to 203, that's a big move. I could play this range, you know what I'm saying, on it, and then make a lot of money. Up in here, it's smaller moves. It's only a $4 move. It's only like a $7 move. That's good. But then you have this bigger range that's more a higher reward range for me, right? And so what is the big time trade when you get into these ranges is when you see a stock about to get into one of those type ranges, and then you get this type of thing flipping. You get your ATR flipped to aggressive, and this is also where so you start seeing stuff like your trend and stuff is in agreement, and then you will see the stock surprise you in a sense. When I say surprise you, you see how Boeing was silent and kind of quiet, but once it gets into the A plus trade range, it can cover that range very fast, especially when the VRVP is looking good, right? And so right now we're in this little choppy range, and so a lot of times you would run across this in real life trading. You would run across this type of price action, right? So you got these bearish orders and stuff like that. But what tends to happen is price will push up and then close above the supply. Then it will drop back down because it's trying to do what? It already got to change the character. It's gonna come up, it's gonna get a breaker structure up here. Anybody that tries to chase it up here once it closes are gonna have to withstand that drawdown, right? It's gonna pull back down and come back down to where the support is. But all this resistance right here that's been holding Boeing hostage, right, up in this little range here, right, with this volume. Once it breaks out of it, it's gonna come back and flip this into support. But then when you look at the chart, all this is just gonna be wide open. So it's next time it breaks out to try to form the next higher high, it's gonna take off into that range. So a lot of times you will see the change of character happen, and then you will see it pull back, and you will see this pattern right here. And so when you're following the market structure, especially when you got something like a cheat code, like a fair value gap, so you will push up, change character. So now it's trying to put in a higher high. Then it's gonna come down and do what? It's gonna come down and put in a higher low. And then a lot of times you have support down here or fair value gap down here to catch you. And then they'll push up again through this traffic, try to close above this level and form a higher high. Then it comes down, forms a higher low, and it's going to try to make a kind of bullish structure to break through all of this price action right here. But when you're looking for A plus trades, you want to pay attention to, okay, where on the chart is the chart lining up to show me that there's nothing above a certain level, a big gap, like Oracle, for example. You see that? You're under your 12, but you're about to mount your 200. You inside of a fair value gap, but look at your A plus range. You got your A plus trade range on a daily chart. And like I was about to show y'all to line up. So you see how we got this sell off here. And I'm telling you to line it up this way because this will show you a good, strong picture of your VRVP. So you always want to line the very first candle on the screen with an institutional event, right? It could be you line it up at this one. I'm looking at a bigger picture. So this is all back in October 2025. I could very well line my chart up with this candle as the first candle because this candle is tied to a supply zone on a 3-day time frame to get my VRVP picture accurate, right? And so now I'm tying my VRVP, my volume profile, to smart money. You know what I'm saying? I don't want it to be random. I want it to be tied to them making a decision, them making a move, a significant candle that they made. And so now it's saying, okay, it's looking at June 1st until the current date and giving me the volume profile based off of when they sold off Oracle, right? And so now we're bouncing out of this supply zone, but look at what Oracle is about to run into, right? So this is when coach say, okay, build a trade like I put out there a couple of times because I saw this coming. The amount of this level, it can push you up into these ranges. So it's going to push up and hit this 12. So those of you that have the Wolf Trend Hunter, these little weird looking lines on the chart, if you don't know what these are, if you have this from being in one of the boot camps, this is just showing you the weekly time frame 12 at all times. So like this yellow squiggly line, this is the 200 from the 1 week chart. So basically, if I flip to the one week chart right now, I'm at the 200. You see that? and you see my 12 is sitting right here. So if I draw a line on my 12, let me see. Let me get a price point. So I'm gonna get a price of the 12 right here, right? I'm gonna get a price of my 200 right here, and this purple line is the 50. I just added the 50 so we can have some trend detection for the 50, right? But the reason why I designed it this way is now if I go back to my daily, right? I can see the higher time frame, 12, the 200, and the 50 from whatever time frame I'm on. I can drop down to the 15-minute chart and know where the you can barely see this because it's yellow, but I can see my weekly 12 and my weekly 200 and the 50 on my chart, no matter what time frame we're in. So sometimes when you see coach, making confident moves in the stock, it's because I'm looking at basically if I put my 12 back on this chart, you know how powerful it is when the 12 crosses the 200 right from the time frame it's on. Well, imagine how much more powerful it is to just be able to see your 12 cloud from the daily chart crossing the 200 weekly and then actually crossing itself. You can see the daily 12 actually cross the weekly 12 because I have them on the chart all the time. You got that wolf trend hunter thing, right? But anyway, when you get into these A plus trade range and you lining your chart up correct, right? I'm just gonna spread this out some more. This is what you look for when you're looking for an A plus trade. This right here is worth your money. Like Oracle is worth the trade plan like right now. Like look at the structure it's giving you. It's giving you a AYN buy signal. If you don't have that indicator, just type in AYN and add it. But it's giving you a buy signal at the fair value gap. More importantly, this is the actual entry candle. So we got the AYN candle and we got a pullback. So when you're dealing with fair value gaps, running into an A plus trade range, when you plan your fair value gaps, your fair value gap is going to come from one, two, three candles, right? So this fair value gap comes from this is the first candle, this is the second candle, this is the third candle. And all it's looking for is a gap between the high of the first candle and the low of the third candle. And that's going to give you the total size of your fair value gap. How do you play a fair value gap? You're going to wait and see if a candle comes back in and tests it for the very first time or closes above the high of the third candle for the breakout, right? And so this candle right here just set inside of the fair value gap candle. This candle pulled back down inside of the fair value gap for the first test. This is your entry candle. So if I was looking at this same trade live, when this candle pushed back, especially if it came down to this thick support level, I would have entered my trade here and I would have set my stop loss either based off my ATR tracker or at the low of the first candle in the fair value gap, right? So if it would have came down here and broke under that, killed that fair value gap, I would have exited that trade and I would have looked for another entry at the first test of this fair value gap or back down at the demand, right? But because it came down and gave this easy money entry, I would have jumped into this and took a risk. So I wouldn't even thought about it. I would have took a risk at this fair value gap test, right? And so, but the thing that's appetizing about this trade that will make me stop immediately and look at this trade is this right here. Empty nodes on the VRVP, huge gaps between support and resistance. The biggest rejection level is going to be sitting here. And then price is always going to try to get back to liquidity. So when they decide to exit Oracle, they're going to exit it at this zone here. So it's going to take its time. It's going to chop around. It's not going to give it all to you in one day. But when they make their grand escape, it's going to be like a buy side sweep or an attack at a liquidity target, right? And so that's why with the wolf chart, our chart is really a liquidity first chart. So it's liquidity first, then we go into structure, then we go into our trend and things like that. So how do we so some of you all answered and said I look at the inverse arc on the higher time frame to know when I'm in the A plus trade. The inverse arc is going to, if it happens in the A plus trade range or right under it, that's a A plus trade. But the inverse arc by itself is just telling you, okay, it's a transition happening, a transfer of control happening. So the WTMA is our early entry detection system, and what it's telling you is that okay, they are entering into this trade right now. I want you all, since this is an advanced class, to really pay attention to this next part because this will help you to understand the WTMA at a higher level. The WTMA knows when a transfer, so when a bigger hedge fund or a bigger money maker comes in and takes control or attempts to take control, it can see when it's happening, right? So just like the thing I built now with where I can see where I knew SpaceX was going to try to push up, it's all built leveraging the intelligence of the WTMA. But the WTMA is going to tell you when that transfer of control is happening, right? And but you have to understand though that because it's telling you when the transfer of control is happening, and it knows, and it basically, an institution came in here. We can agree that this order block appeared on this chart in this range. This is where smart money came in and tried to buy. Right. We know that this is when another bigger institution came in and bought right here. Right. But when you think about order blocks, price does not leave an order block immediately, does it? They accumulate a little bit. So all we know is that smart money came in and they started accumulating Oracle in this range. They pushed up, they came back down, made a higher low, and then they took it out. So we know that they was here based off of these order blocks, right? Now, when you really start breaking down the WTMA, what does it tell us? It tells us where they're accumulating and where they're buying it. But the reason price doesn't always just run away from the WTMA as soon as it crosses over is because it's letting you know exactly the range or a ballpark range on where they're accumulating the stock. Accumulation may take some candles, but eventually price will leave there when they're finished accumulating, right? So like right here, if we look at this, the WTMA already snitched. If I went to the Discord back to this date, it's gonna say Oracle has an inverse arc on a daily time frame. We know that they're accumulating in this range. All the other people that have order blocks on their charts, they don't know yet, right? They wait on this order block to appear. But look what happens. So we know that they've accumulated here. So I could literally come in here and draw. I can take the WTMA and just take a range on it and say, okay, it's going to be an order block. I know because I know what the WTMA is. There's going to be this is where smart money has come in. Another institution has come in and tried to take over this downtrend and try to push Oracle up. This is where they enter into the stock, right? Now, look when the zone is going to pop up though. So we know at the lock candle here, this is May the 2nd, right? And so look at this. Now the order block is in the range, right? So now we have an order block here in this range, in this price range, but this is all the way on May the 14th. So that's a huge amount of candle. That's 9 days of trading before the rest of retail. Oh, smart money has came into Oracle, right? Now they ready to have confidence in the play, right? So because we know that, and since I back tested what the WTMA is, I can come here as well and come to the actual lock candle, and we can do the same thing over and over and over and over again. Okay, I know smart money has started selling Oracle at really this candle right here, right? We know it on the March the 26th. But when is the general market, when they know that smart money came in to sell them, right? This is on April the 9th. So we knew what March 27th, they know April the 9th, right? So that's why sometimes you will see Lux Algo and Trend Spider say, hey, this stock is breaking out, but we already got the alert probably the week before or, some days before, or I've already called out what they're calling out to retail because the WTMA is so much faster. But with it being faster, you have to understand that it's going to operate like an accumulation zone. It's telling you like right here, you see you got the inverse arc right here in this range. Look how much accumulation is happening here. It's letting you know that, hey, This is where they've decided to plant their flag. This is where their position is going to be at, right? And so now we can see this is letting us know that another institution has come in to accumulate the stock. So it's not always just going to run out of there, but it's telling you this is the range. So that's why when you get an inverse arc on your higher time frame, you should always go ahead and build your trade plan, because then Black Wolf will say, okay, we know that liquidity is going to be here. We know that liquidity lives around this WTMA arc, right? And so because we know what it is and we know that it's giving us a heads up on where they're buying, the actual location of where their zone is at, we can know, you know what I'm saying, pretty much where they accumulate at, build a trade plan, and play this range around the WTMA inverse arcs, right? And so once you understand that the WTMA is just an early detection of where the demand is going to be at. When you look at demand zones, you're getting like what, one, two, three, four candles before it left. You get another one here. Look at the position of the WTMA here with this inverse arc. If I draw a line or I draw anything under this arc where they made the transition, look where the bounce is happening. They came right back down to the WTMA, bounced out of it, and you can do that literally with any arc on the WTMA. It's going to be a liquidity level, you know what I'm saying, in the future. If the stock was dropping and say Oracle just kept dropping and dropping, this top of this WTMA right here is where it's going to sweep liquidity. So this is how I also know where liquidity sweeps will happen at with high conviction is not only when it peaks its head above a supply zone, or I mean a bearish order block or a bullish order block, or around certain structures, when it sweeps this the top or the bottom of a WTMA level, is going, that's where your high profile liquidity sweeps will happen, you know what I'm saying, with the WTMA, okay? And so when we're looking at our A plus trade ranges and we're looking at what the WTMA is trying to tell us, you utilize the WTMA in its position to let you know, okay, now if you're under if you're above the WTMA, you're in agreement with the current institutional push, right? Once price flips back in the inside of it, it's going to try to act as strong resistance and pull the stock down. So when you're looking at your wolf chart, you're using your WTMA, your 12, and your 200 for trend alignment. Okay, are we aligned? Are we above the short term trend and a long term trend? And is the WTMA fighting me or is it working with me? Right? Because if it's going to fight you, a lot of times, if the WTMA and the 12 is in the argument, the WTMA will win most of those fights, right? And it's going to smoke out your up move. Just like here, you know, we slipped in, we above the 12, they fighting for a little bit, and then once they become an agreement, you know what I'm saying, they'll drop out, right? But if I'm in a cause, I'm not exiting just because I'm in disagreement. If I'm holding my structure and I'm holding my 12, I'm gonna try to get to my target. But you have to use your targets as targets, right? So a lot of times what we'll do is we'll get to a target and we're still curious, you know what I'm saying, of what do we need to do? Now, I'm not saying if your trading plan has something different. I'm saying if you're trading and you see yourself running into a target and you see yourself getting rejected and you see the trend shifting over or transfer control shifting because WTMA letting you know on a higher time frame, you have to take those signals and either be having your stop loss in place or having your exit strategy on point. You know what I'm saying? As you're following your trade plan, you want to trust your trade plan, have your stop loss in smart position, but also a lot of times we won't trim, you know what I'm saying, at our targets. We'll just be holding it, trying to get the maximum gain. But part of getting the maximum gain is being able to trim as you're going toward, when you get to take profit one, you got to take some off the table. When you get to take profit two, you got to take some off the table. And so understanding what an A plus trade looks like will help you to prioritize your time, right? So if I go to the swing trade, Wolf Empire swing trade stocks, all these stocks on the Wolf Empire swing trade, when if I go through them, these are stocks that are in higher time frame uptrends, right? Or strong. Nvidia pulling back a little bit, but these are your stronger stocks. This is being kind of performing decent in the market, right? Yeah, I draw these. Yeah, I think I drew them. And so when you're looking at these, but you still want to be looking at, okay, what stock is in the A plus type of range? I'm in replay. That's why. All right, let me get out of replay. So we go back to the NVIDIA chart. So we're pushing up, and overnight, you see how we had 224, 47, still trying to push, but we see the ATR tracker is doing well, right? But when you flipping through here, you want to be looking for, okay, what's got an A plus trade rate? So look at Microsoft, a close above this level, right? Then you clear this out the way, all right? But then when you pull back down here, look what you have. You have one, two, three, created this fair value gap. This candle closed above the high of the third fair value gap candle. Then you proceeded to break out to hit what? The liquidity target. You did what was expected at liquidity. You hit the bearish order block and you rejected. But now, what's the entry that's obvious on the chart to you guys? When would it make sense to take a risk on Microsoft from you all looking at this chart?
After it clears that order block.
Hmm?
After it clears the order block.
Okay, that's yep. So after it clears the order block, what's the other one? What would be the better entry
I'm gonna wait for it to pull back
to where?
at least for what 65 at least.
65. Okay, yeah, yep. That's the entry I saw as well. Now, when it clears his order block, once it clears his order block, that's the apex time to build a trade plan, right? You can build your trade plan once it close, but see, it has to close above that level on the daily chart. So it's going to have to clear. You can't, even if it disappears during a trading day, that's not good enough because when it pushes up here, this order block is going to disappear. But when it pushes up here, because it's the only thing they can clear out of an order block is a candle to close above it from its time frame, right? So when you're investigating the order blocks, you also have to say, okay, is this order block on Microsoft on any other time frame higher than the daily? So then if I come here and I look at my 3-day chart, it's an order block way up here. So that daily one that we were looking at is the level that you had to close above, right? This 513. But once you close above it, you want to wait for a pullback still. It's not going to be this pullback that we want to get here at 465. Now, the reason why this is a great pullback entry level at 460, now it probably won't go down that low, but if it does, this will be the best entry for Microsoft to go long because when it pulls back, this fair value gap has never been tested, right? So when it pulls back to it, it's going to be the first test. When you're trading order blocks, the money is made on the first test of the order block. I mean, on the fair value gap. Same thing is true with your order blocks. When an order block is made, when it comes back for that very first retest, that's when you have that high probability bounce entry that you can make. And so right here, this would be a great entry. But like you said earlier, if it closes above this level, you don't want to jump in as soon as it closes above the level. You want to close above that level. Now that becomes a very important candle on your wolf chart that you can either take the high and low of it and play it on lower time frames, or you can go ahead and build your trade plan because it just signal that it's trying to push up to wherever the next liquidity target is, right? So when Microsoft was way back down here, right, at this candle, let's look and see. It had a close above this order block, right? So let's look at the close. It gapped up. So it gapped up above that level, pushed up again, and now we're at this liquidity target. So here, but like I said, we closed above it. This count, it doesn't look like it because we're just skipping through these candles. But once it closed over that order block, you see how it's labeled supply zone conquered. What happened the next day? So it closed above at 493. I'm looking at the price over here. The close was like around 492.76. Then it pulled back all the way down to 486. Right. So it closed above supply, had a pullback, and then it broke back out. So the same thing may happen here. Close above that level, and then if it pulls back to give you a pullback entry, then you want to play it. So as soon as it closes above this order block, you want to build the trade plan and then proceed from there. Hold on one second, guys. Now we're gonna go into like 10 minutes of questions. So go ahead and get your questions ready. And just give me like 5 minutes, okay? All right, guys, I'm back. So let's go into some questions. Do you all have some questions for me?
I'll do real quick. I've been trying to understand the concept of the lock candle. That concept is like, I don't know, I'm not fully getting it. I think I am, and then I'm not. So can you
Okay.
explain the lock candle for me?
Okay, so the lock candle just specifically deals with the WTMA. Okay. And so when you're looking at the WTMA, we zoom into it. We know when a transition is happening, when the WTMA crosses down on this red signal line right here, okay? So on the wolf chart, this lime green line is the WTMA. This red line is the WTMA signal line, okay? So that means it's just part of showing us the confirmation of the WTMA when that shift is happening. Now, the lock candle is just a candle that closes while the green line has successfully crossed down on the WTMA. So, for example, you see how we had the WTMA trying to cross here, but while this signal line, while the WTMA was crossed, this candle closed while it was crossed. It just locks in the crossover. All right. So it just confirms that the crossover has locked in when the candle closes while it's crossed over up or down. Right. So, like right here, when this WTMA was bearish because it had crossed and it was acting as strong resistance. So every time a candle will pop up, it will reject. Candle pop up, it will reject. Then we have the WTMA crossing its signal line. And then this candle right here closes while the WTMA has crossed its signal line. This locks in the crossover. So all this locking is the crossover for the WTMA and the signal line. You get what I'm saying? So we're looking at this event right here. When the WTMA, this lime green line crosses that red one, the first candle that closes while that cross is still crossed over.
Got you.
Did
Okay.
that make sense?
Yeah, I got you.
So what'll happen is if you say, for example, we were live trading, the WTMA will cross over here and say this candle right here is still developing, and say this candle starts dropping back down, the crossover would just unfold and never cross, right? But if this candle holds its momentum long enough and this WTMA gets the successful crossover, then it will be a confirmed lock of the WTMA. So this locks in that crossover.
And then from there we play you can play off the lock candle like looking at candles closing above or below it to
That's
for
correct.
like continued momentum.
That's correct.
Got
So
you, got you.
even from this perspective right here, if I took just the high and lower this lock candle, because we say, okay, the wolf chart deemed this as an important candle, right? Now you got a fight ahead of you because if you look at the VRVP, you can tell there's not gonna be no easy push up because you got so much resistance right here, right? Then you got resistance here. But I'm just gonna take the high and low of this candle. The stop price ends up being in a range of this candle right here, right? Now for the stock to truly become bearish again, it would have to, let me get under the low of that. Yeah. So for the stop price to get bearish again, you need candles to start closing under the low of this candle right here to push down, right? And so like even here, so it pushes up, it comes back down to the top of this WTMA, and we pushed down. We bounced off the bottom of this low, right? Now this was days later. This was on July 1st. It retested it on the 9th of and that's June. Is that June? July. So it created this lock candle on the first, pushed up, and then it came down. It wasn't a coincidence that price came back and bounced right at the low of this lock candle, right? Then we push up again. Look what happened at the high of it. We swept liquidity, so we can't break over it. It's pushed up and it rejected. Then this candle right here pushed up, closed above it, but then came back down. And then once we got an open and close candle over here, we pushed down and we got liquidity sweeps over here. So we pushed up after we got back above it. We still playing around the high of it here, but we still never broke under the low of that lock candle. And then it proceeded to go ahead and break out. I think they might have had earnings or something, right? So they were basically waiting on earnings, but it gave us our confirmation candle here, right? And so what you need to do as a wolf though is once you get your confirmation candle on this time frame, you can go ahead and build a trade plan. If you're trading and say you can't build a trade plan, like sometimes I can't build a trade plan, but if you play the lock candles range on the lower time frames, you can also play lock candles like that. So any important candles in the chart, you can play them from the lower time frame, play their range, and breaking above the high with strong candles, you can play the little move up and things like that. But so once you capture the range of this candle, then you kind of know if you're going to get a pullback entry or a breakout entry on the if you know the range of your lock candle or you know how to identify it.
Yeah, yeah, yeah. No, that's a great help right there. I
Mm,
definitely understand it now.
okay. Anybody else got some questions? It can be off topic. You don't
I
have to
got
be. Go
I
ahead.
got one off topic and one on topic.
All right.
I lost my chart. I just wanted to go over, I guess, my VRVP levels and your VRVP levels. I got I do my row size at 250. I leave the value area at default, and I do 26 on my width.
All right. Yeah, the only thing I change on mine is on my inputs I put 200 for the row size and 100 for volume. I mean for your value area volume.
Yeah. Okay.
Yeah,
All right.
yes. So just them two on the input setting. And then if you want to change your colors with these two, right? So the way I teach people how to use the VRVP, I don't focus on bullish versus bearish volume with inside of this profile.
Yeah, I
Uh,
got mine. I just look
black,
at
yeah,
volume. That's all I
yeah,
care
that's right.
about.
Yeah, all we care about with this thing is that we know that this is chop. This is the
Yeah.
range we can make our money. This is choppy. This is the money range. These little empty spots. And if you look over here and you look at Microsoft, it'll show you that it's gonna chop in this little range and it's gonna pop or drop hard. We look at this VRVP and look at the open range up in here. Look at Microsoft. It take off in that little empty spot. And so that's what we want to get to the bag where we want to make the easiest money as possible. And so when you see that ATR flip aggressive in one of these type of ranges, that's when you can make your money. You know what I'm saying? It's easy to make money when you can see where the easy money. So we can see ahead of time when Wall Street is ready to get paid. That's why I say it's payday. The ATR tracker will show you when it's payday because it's going to show you when they're trying to go ahead and once they get in a position and when they're trying to make that profit, like right here with Dell, they trying their best to get back up here and make some profit. They already did it right here. So they came up here and they just swept liquidity with a buy side sweep. That's how you know they finna jump out and they close back under here. They got what they came for. They got in low and they sold high. So they always gonna buy low, sell high. Then they gonna try to rinse and repeat. They came back down and they created a breaker structure right here, which left this order block here. When they push down, you can see that they push under the order block, and then when they close back in it, that means they're in the trade at this point. Now they're trying to do what? Look at the overnight. They're trying to get back up here and make some money. It's payday over here, VRVP open, and they got their sweep, and then you got the flip of that VRVP. That mean they trying to push back up and get their money. Now price hesitated right here. at this wick right here. You see how price wicked right here. Now we got a couple of things on this chart should stand out to you all if you looking close. But why do y'all think when Dale pushed up, it stopped right here at this level, other than the previous day high?
Liquidity
Oh,
level.
yeah, you see that the art over to the left.
All right, yep. So just like we know that when they transitioning and making money, when they trying to when they making decisions with their money, these liquidity levels, this is gonna always be historical liquidity, right? And I just drew this level across here, but look how many liquidity sweeps are happening at the top of this arc. Sweep, drop. Can't break above it here. You got now to get above liquidity, it ain't like an order block. You got to open and close a candle above it, full body and wick like a floating candle. You got to open and close above it and then come back down and it's going to sweep on the next candle, a sell side sweep, and then it's going to run up. So just pretty much like what happened here with Dell. You see how they opened and closed above this liquidity level? Even though they rejected here, two things happened. They swept right here, but they opened and closed the candle. These just liquidity sweep candles. So they came down, swept. They never lost it with an open and closed candle. They sweeping again, and they finna try to run it up for real this time. So they done got their money. But you see how rejection here, rejection here, rejection, rejection. They're still trying to get above that WTMA liquidity. And also, right here, you have your breaker structure. Pay attention to the candles that leave the high of the breaker structure candles or the low of it's on puts, because these make some of your best exit and entry targets as well. You see this breaker structure right here will play dividends even on your lower time frames. When you could drop down to like the 1 hour and stuff like that, you will see that breaker structure from the daily time frame, that high that candle will start acting as resistance on your lower time frames and your support levels. I don't know if it was already here back then, but you was just the breaker structure, the higher that candle that created the breaker structure is an important level. It's just as important as a previous day high, previous day low from a liquidity perspective. When you understand the levels of your breaker structure, price will come back down to that breaker structure sometimes as a resistance or support, right? So like right here, we got a breaker structure over here. And if I draw a line on the low of that candle, since it's a bearish one, I'll draw a line over here. Look when the breakout happened. Rejection, rejection. And then when you got above that old breaker structure and this new one here, but you see how you can see the breakouts happening because the chart is kind of showing you. I might code them lines to where they kind of go all the way across the chart, them dash lines, but they're important levels when you can see breakouts or retest for new breakouts. So those candles are always important levels. Okay. So we'll take a few more questions, and I'm gonna get into just some entries, how we need to be entering into our plays, and some decent techniques for that, so you all can kind of utilize it tomorrow.
I got a question that kind of goes hand in hand with that. Um, I don't know if you could, if you can, take a look at July 24th on Accenture. I was looking for a swing entry in a day trade on the Monday, the 27th. It seemed to me that maybe my swing confirmation came really in the after hours. I was looking at like the 12 mount the cloud, and I've been tracking it on much higher time frames for a while. But I felt like you know, that I mean, I was just distracted that day. I was working any which ways, but while we were talking, I think that Sunday night I was just like on the after hours, it just looked like my confirmation was coming, and that was all right. I took the day trade on the Monday, but it didn't do what I wanted it to do, to get in on a swing on it again. So that's what I was just kind of asking about, was Friday really my confirmation for me to get in on that on a a swing on the Monday. I did get in on the day trade, but that's what I'm asking.
So which talking about this past Friday?
No, Friday, July 24th. And on Sunday night when we was talking, I was just looking at the after. I was just like, that's kind of my confirmation there, but it
Now,
never did.
yeah. So
Yeah,
if your confirmation happens in like pre-market, it just
yeah.
it depends on how much volume. Like if you get a lot of volume in, and say volume comes in pre-market and it's making decent moves, all you have to do is you want to copy that same trade plan that you got. If you did you build a trade plan for this or you just was eyeballing it?
Oh no, no, yeah. I've been tracking it for a minute. I was just the guy like playing double dutch, just didn't get in.
Okay, yeah. So a couple of things stand out to me in this trade. First of all, when you have a fair value gap like this right here, now is every fair value gap is not equal. But whenever you see, this is a 1 hour chart, but I'm just sometimes you'll see this on a daily.
No, I
The
was exactly looking at the 1 hour chart for
Oh yeah,
this.
yeah. So ain't everything about this trade says it's about to explode up, right? And so the reason why I say that is that location is king. You're sitting down at an old order block with a new order block here, and you got a WTMA inverse arc inside of the order block, right? But more importantly, maybe it was a supply zone here at first or something. I'm not sure, but this right here, this setup right here, whenever you see demand zones and a fair value gap literally in the demand zone, these are some of your strongest breakout trades. Okay. You had like a fair value gap overlapping the demand zone. And so you never got the retest of this fair value gap, but it looks like you got the retest on this smaller one right here. This right here just screams out a big breakout because you got the 12 that was stuck inside of the 200 cloud and you got a crossover. This is a very bullish crossover in a wolf chart when you're crossing that. But let me see what the position of the WTMA cloud was.
Yeah, we
Okay.
were actually talking about it, and as you were talking about it, I was looking at it, I was like, this is
Yeah.
kind of what I've been waiting on.
Yeah.
And I
Yeah. This
think there
is
was like a 147 level of some sort that was there that I was
okay.
waiting for, to get over.
Yeah. So yeah, this chart right here is just like a great breakout chart. Um, things that stand out about me and should, what as you're advancing and understanding the WTMA cloud and the indicators, it gave you a 4 hour trigger. So you'd have to play this from the 4 hour chart, it looks like. But you see how thin the WTMA cloud got? This type of compression right here. You see how everything is inside of the 200. This is probably this was like this is a parabolic move pending about to happen as soon as you close over this level because now you have your A plus trade. Now this is
Yeah,
right here.
there,
When I
yeah,
say
it's the 4 hour that I
yeah,
was looking at. So yeah,
so this is like this is this is the type of trade like when I see a trade, if I was looking at this trade, like going back to it, this is the type of trade where you just kind of you can make a ton of money. This is like a and I'm saying bet the house type. I ain't saying none of that. Keep your risk management. But these are the type of trades that you get, sometimes, right? You get these type of trades sometime because you have this reversal. You remount your WTMA cloud, but this is finna run into that stack, that bullish stack, to where you had a yellow WTM, you had a yellow 200, a green WTMA cloud, and the blue 12 all kind of stacked like a sandwich above each other. But the fact that the 12 is crossing the WTMA cloud and the 200 at the same time, it's just gonna lead to a parabolic run. But more importantly, look at your range, bro. Like everything's turned on. It just is a huge A plus trade range with nothing to stop it from just
yeah, this
explode.
is what I was
Yeah,
like. I'm
yeah,
I'm still sour about it because I just didn't take enough risk on it.
yeah,
This is what I feel.
yeah. So yeah, this is a brilliant A plus trade setup, and you see how look how easy that money was. And then look at the target. It stopped right at its target, but we know from talking about liquidity, it's trying to get here, and then it's trying to get here ultimately, right? And so it's gonna try to get to that liquidity level, and that's where it's gonna eventually kind of crash out. You know what I'm saying? Once it gets to that supply, you know what I'm saying, that main supply zone. And so let's see if it and so look, you see how it did all that jerking around, stuff like that. But when they get ready to dump it, it's gonna be at, you know, liquidity levels. This target up here, and then you got another order block, I think, around in this level. But that's when they're gonna try to get out of it. But yeah, that was a parabolic move pending right there. Anytime you see that type of compression, where everything is stuck right inside of all these clouds are packed together like that, it's gonna make a big move. But the thing that was most important, let's go back and look at one more time about this compression is that, and then you ain't got to worry about being late or nothing like that. You know what I'm saying? It's just a move like that, even if it takes off, man. Like you already see the A plus trade range, right? So you know where they're trying to take it to. They're gonna take it to this 12 first, and then they're gonna go and try to get to these higher levels, right? And so, but what I want to see is what was the ATR tracker. So it was already aggressive at the block. So it was so they went into this compression state. And when I say compression, you can tell when compression is happening. So you go through accumulation, right? So let me show that to you all since you all are advanced as well. So this right here is when they're accumulating, right? So they're accumulating. You can see price getting pushed down, and in like hedge fund terms, like my mentor taught me, like my chart is built around kind of like a hedge fund strategy. You're seeing absorption right here. So that means that when prices getting pushed down, every time bears try to push it down, they absorb price. So they absorbing all the sell orders. They're like, okay, we want to buy them now. So every time they push down, they getting absorbed. They push down again, they're absorbing it, all the bearish action. You know when you're in compression because the candles, the range that they move, they start getting smaller and smaller. You see how like these candles start getting tiny, 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 then they explode afterwards. So you go through absorption at demands and a bullish order block. You will see price push down. You'll see a wick pop up. Then they'll push it down again, and you'll see another wick gets pushed up. But it'd be a decent range on the candles. But then you'll start seeing, and this is what you will hear from retail traders and your peers, like a real retail trader. What you will hear is, man, uh, ACN ain't doing nothing today, bro. It's just sitting in the same spot. It's barely moving. It's like watching paint dry, right? You start hearing this, right? That's how we talk. But what does that mean? That means that you looking at a stock that's in compression, right? Stock can't barely do nothing. Like every time it push up, it's getting sold. Every time it push down, it's getting bought. So you have them selling it and buying it in a tight range, and then that leads to that expansion, which is that third pillar. It's going to expand, just like if you was pushing down a spring from both directions, and then say the person on the top that was pushing it down got tired. They couldn't push it down no more. They're like, man, forget it. Whatever. All that pressure from bottom, just like a tug of war, when the other side give out, it ain't like an easy little thing. Everything's gonna fall. It's gonna expand, right? So that pressure is gonna go into expansion, and you see it explode, and then it starts over again. Like here, so came back down. You got too much support under you, so they're absorbing it. Every time I push down, then you see the candles get small in range, very boring. Can't do nothing. Just look at it. Look at these pennies. It's literally moving pennies in these little ranges. And then you're finna enter into expansion. So once you get above it, you start boom, big candles, expansion, 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 and it starts going, like starts moving way more than what it normally would move, right? And so when your eyes start seeing that process at the right locations, then you know when something's finna break down or when something's finna explode up. And so you got to keep your ears like stuck to keep your ears to the streets. In other words, just like Palantir, you have with this expansion period, and then you start. Well, look at these little tiny candles, right? And you get these little tiny candles, and you get this next move, right? And so that's what you want to get used to seeing. Like you see that, you'll keep seeing it. Once you see it, you ain't gonna be able to unsee it. When they're okay, we in the range where we know they got a position at because the WTMA done crossed over, and then you got pushing price down. They bought it. They absorbed the price. They push it again. They absorb the price. And then the candle start getting really tight. Palantir just moving only $1, right? And then you expand, right? It's going to expand after that compression. It's going to expand. All you need to see is that, okay, now participation over here has started thinning out. And you can see where they're going to try to make their push on the stock, right? And so just looking for that behavior helps you. At the top, when you're dealing with something finna drop, it's the same process, but instead of you saying the word absorption, like their absorbing price is they use a term called distribution. And all that means is that every time the stock will push up, you'll see this type of activity. Let me get this blue box out the way. You'll see, sell off wick. Bulls will try to push it up again, they sell it off. Bulls will try to push up again, they selling it off, and then they keep selling it and keep selling it until price gets really, really tight. You see how it start getting really tight right here, and then you start getting your expansion candles going down. But you see how it will line up with low participation. That's your biggest clue. You'll see the opening gaps in your historical support and resistance, and then you will see low volume participation, which means that your VRVP is telling you volume happened at this price, right? Your volume down here tells you at what time. Okay, volume happened on this date and time down here. You can't really, you can trade that, but it's more delayed, right? Because if I have a volume popping up right here, I can see the volume, and then after the volume comes in, I can anticipate, okay, I got a big volume node that came in right here, so maybe we'll get some follow through. And you can see that, okay, at this time, volume came in, right? So and it has its value. Here, this is telling us something of greater importance. This is where institutions came in, and if we lose this level, we lose this volume price right here, then there's little to no buying activity of any significance from a big institution in anything in this range. So if Palantir starts breaking down, it can drop pretty quick before it gets back down to where we had buyer interest at a significant level. And so you can already see, okay, when it start breaking and losing the 200 or breaking down in this range and expanding down, you can get some really good trades out of this because of the low participation from the VRVP. Right. And so what you seeing that it helps. And then your WTMA cloud is like the chef kiss of knowing when something is getting its butt whooped, because when it gets above you, we already know how strong of support that the WTMA is. The WTMA cloud is literally a big giant group of WTMAs that are stronger than this WTMA. So just like we got a bearish arc here, if you pay attention to this structure, this is a big, humongous bearish arc happening with this cloud. And so it got really tight in this range here, and it slimmed up. And we got the 12 to start holding under it, right? When that 12 gets under this WTMA cloud, that's bearish, man. Both of these bearish at the same time is, the stock, that's a lot of abandonment from an institutional level. Okay, so you have the institutions have abandoned it in the sense that the bearish institution is finna win this. Then you had a short-term trend, you just gave it up. Then you lose the long-term trend. So in stages, you have that early transfer of power, and then your short-term trend gets lost. You're already losing the institutional flow here with the WTMA cloud telling you. And then you have that expansion down. And then from a long-term trend, you just lost a long-term trend for the next drop down. And so that's how we play it. You know what I'm saying? If I was playing this, I'm playing this expansion down, but I'm out at the 200 cloud. When we start holding back under here, then I'm back in for the follow through, or my stop is tight here. But I always exit at the 200. If I'm dropping down on a yellow 200, I always take profit here or trim or tighten my stop loss. And then once we get under this 227 range right here, then I can get back in to the trade on the way down. But you always try to play it smart. You don't have to hold it, you know what I'm saying, the whole time, or hold it carelessly the whole time. If you're going, like, just like right here, so the perfect example, look at these other times. The reason why I behave the way I behave. We got a bearish arc. We flipped the 12, broke down under it. We pushed down, super aggressive. But if I'd have been like, oh yeah, if I'd have just rubbed my hands together and like, oh yeah, we finna go. This thing finna drop. This thing popped back up within like a couple of candles from 128 all the way back up to 137. If you in a trade, you lost this trade. Okay, like you're gonna lose that trade every time, right? It's gonna freak you out. You're gonna cut the loss or you just gonna give up on it, right? Same thing here. We lost it, dropped down. Look where we touched that 200 cloud, and we bounced up from 129 all the way to 136. So that's why I always take them in stages. If I take this trade down, my stop is tight. So we get that bounce, I get stopped out. All right, that trade won. I'm not really worried about it. We bounce down here, I get stopped out in profit. Then I won the trade still. Here, I exit or I got my stop tight. If it's just trailing and trailing and trailing, and then it hold. If it did pop up or whatever, I'm kicked out. But I know that I can keep watching the trade because I got some. I'm owning something here with this big red candle. And then once we get these open and close candles, I can play it again, right? I can look at the high and low of this candle. Once this candle closes under, I can get in. Or if it bounces back up and tests the 12, I know it's bearish already. So I'm gonna enter my short at support. I mean at the rejection, and then play it down. But you want to be disciplined with the system, and take what I'm saying at face value, into proving otherwise, right? When you hitting these levels, like your 200, this means that you're basically playing puts on an overall bullish time frame, right? So you want to respect the 200 until it says, okay, we finna let it drop, and then you go ahead and play your, you can have more puts with follow through. All right, so let's talk about some entries, some entry techniques with the rest of our, yeah. Let's talk about some entry techniques. So I'm gonna get out of replay mode. So it's a couple of entries I want you all to be working on. Once once you answer the question of your trend. So when we're talking about the trend, we're going to be looking at our 12 cloud. We're going to be looking at your WTMA cloud, basically your clouds. You're looking at your clouds and you're looking at the trend of a stock. Then you answer those questions and you say, okay, I understand our trend, right? Now, once you understand the trend of the stock and you see that, okay, I have a range that makes sense for me to play, right? I understand what an A plus trade looks like. I'm looking for, these big holes. Now they don't gotta be humongous, but you need to have some room to run, right? That'd be like, so we think about this as these candles as a car on a drag strip, and we trying to race somebody, or we trying to not even look at it as a race, but we looking for a range where we can run, or think about it as football or whatever. If I'm trying to run this route and I'm trying to get to the end zone right here, I'm trying to make some money, I'm trying to get some yardage. I don't want to take my risk, you know what I'm saying, like here, right? I'm looking for the holes. I'm a running back. I'm looking for, okay, what route makes sense for me to get the ball and run this thing and get some yardage. Like if I'm thinking about this thing like a game or something like that, or you think about it with like whatever you play, sport, a video game, just look at the terrain and say, dang, look at this. This right here doesn't look like the best range to be trying to go long or stay in. Look at this. You got to be in and out pretty quick. But then look at this. This thing is ready to explode in these range. This is the easier terrain. This is the easiest landscape. This is the easiest opportunity to make money. Look, they're just going to give me the money here, right? And every stock, all these different stocks have this happening at different times. You just want to go and find. You just want to look and see. Okay, like right here. Okay, you can make some money in here, but this is very hard, labor intense money right up in here, man. Like I don't want this. I don't want none of this Palantir money right here. This little crap right here where you wick here, push up, reject, push back down, wick, chop, 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 $4 range. You know what I'm saying? Just but right here from 331 to 327, I take that money. I would love to take this money. This is better money, right? 119 to 126 because of the range, right? But then here, this is a lot of money on Palantir, like right. That's a lot of money. And so even after we get all this stuff out the way, that's some good money on Palantir. That's what you want to look for when you're looking at your entries and stuff like that. When you see stuff like this on a daily time frame or the 1 hour, the 2 hour, that's when you know you're gonna make some money. And the charts will show you when a stock is about to do that. Just like my man was looking at ACN, that was a big chart. You know what I'm saying? That was a big move that stock was about to make, right? And so let's look at Boeing. We got a lot of order blocks in a way, but let's pull the chart over and see what we look like from just a trade perspective. So right here on Boeing, even though Boeing is trying to make this little move, it got some work to do. We can tell that it need to close above this level, pull back. And once it closes above 255, or we get in this range, let me see, they're down here. So right now, if we stretch this chart out, this is not a bad range on them. Here, 231 to 237, and then from 237 to 244, which is a range. They always try to get back to 244. So they got they got a decent range from historical support. And then I will evaluate their VRVP to see. Let's see, they're pulling back to current price. So we're gonna line this up with the demand zone down here. Get us a VRVP read. Let's see. So they pushing through a little chop. They gonna make their money. So closing above 254 is the best thing to do. So they're not really just ready. You know what I'm saying? When I look at their chart, it's not like a chart just like, come on, trade me right now. They got some stuff they can do. And I'm willing to wait. You know what I'm saying? Like this right here is almost close to ready. Look at Starbucks. They get a close above this level, and then that's an A plus trade all the way to 115, right? That's easy money coming up on them. Look at CrowdStrike. CrowdStrike is they already had earnings. They hadn't had earnings yet. Nope. Let's try. I'm trying to find some that already had earnings. Let's see. Dell, I think they got earnings coming up. Ooh, now look at this chart. Now this is a beautiful chart. This is a moneymaker chart, right? So look at this chart right here. They're very close to the 12, getting above the WTMA cloud, right? And they're also about to have a fresh inverse arc if they maintain price above this level. You see, we got the WTMA arc right here hating on us, right? They got this level. If I just put my line right there, you see I keep sweeping, can't break it. It's hitting that liquidity resistance, right? But they got to change the character. Then they got the breaker structure, right? That's what you want to see. The breaker structure confirms that we have changed the downtrend on them, right? So it was in this downtrend. We got to change the character. Then we got to break a structure, right? After we got the breaker structure, oh, look what happened. Break a structure, and then we pull back to form a what? Higher low. You see that? Break a structure, and we pulling back to form our structure, higher low. So when you saw this pullback happening, this is where you say, oh my, they coming back down to this order block for the first time for the retest. You would have been immediately building your trade plan here to see what your entry should be, right? So this is your golden ticket entry. Break a structure, and then it starts pulling back, but you're in a bullish trend. So you want to, when you see big red candles on the stock that's in a bullish trend, these are money making opportunities. That's why when I say, hey, Apple's pulling back right now, build your trade plan, or this Palantir is pulling back when it was way back down at them low levels, go ahead and build your trade plan now while they're pulling back, because then you get in cheap and then you be up 200, 300, 400% before you know it, because you got in at a good location. So it pushed up, got a break of structure, and it cooled down to come in and just follow market structure. It's trying to come in and put in a higher low at a key level. You got a lot of confluence right here. You got an order block, first retest, you above the weekly 12. You coming back into where a lot of institutions have gathered their volume. They in this price point, right? So you pull down, tested it for the first retest, and then it starts breaking back out. All you have to do, all you doing here, you're not gambling or taking a risk. As soon as you see that thing drop down and touch that right there, build a trade plan. It's gonna tell you your entries, right? You came into the empty range where the easy money was. Look at the easy money was between 597 and 613. You pushed up from 592, and when you got to this 513, 516 up in this range, you start struggling, and then you hit this liquidity resistance, right? All it's doing now is trying to inverse arc, and then it's going to try to explode up and get above this high. So it's going to try to push up, break above where we had to break a structure. It's gonna try to push up, but ultimately they're trying to get here, right? They got earnings coming up on the 20th, which we got some time, and so they're trying to push up and get to this where this liquidity is. They may make them wait until earnings. I'm not sure, but you see how we got the 200, the 12 is blue, and we might get above the WTMA cloud and start doing something. But you trying to get back in position to do this right here. Look at this same scenario that ACN had, but this is DE. But you see how you had this compression all inside of all the clouds bunched up, and then once they unfold, you get yellow, green, blue, right? You get this WTMA cloud sloped up, 12 sloped up, and that's when you finna have that decent move, right? And so we got decent compression on the WTMA cloud. It's really tight and small. Your 200 is already established. You in a bullish trend, and so higher high, higher low, higher high, higher low. It's trying to make the higher high now, and we'll see what it do. But this to me is in an A+ trade range where they can get back to 640, and then they're gonna try to get to 664. Right. So this is what you want to look for. You see how we were looking at other stocks and they got so much stuff at the top of it. But if we come here, look what just happened. I'm willing to bet that it's probably had a chart that looked like it about to break out, but it had some red zones and some nasty stuff, saying that they had to get above and things like that, right? And so we got our order block here. And then so it did what it needed to do. It closed above that level, cleared it out the way, pushed down, came to the first test, right? And then now it decided to push back up and give us a cleaner move, right? So what do? We just let it clear the obstacles out the way with their money because we can see the obstacle there. So we don't want to help them. We want to be selfish. We want them to clear all that stuff out for us. We want to be lazy. We want to wait till it come down, come back. Okay, y'all cleared that out. Let it pull back, build our trade plan, get the contracts cheap because we know the trend is already established. We above the long-term trend. We good on all that. We ain't talking about trend no more. We're looking for a good entry on a bullish breakout, right? We were looking for a good entry on a bullish trade that's making higher highs and higher lows, right? So you got to shape your mind from thinking, man, I want to get in. It's bullish, so I want to get on the big, beautiful green candle. No, it's bullish. So when it's pulling back to make the higher low, you want to get in at the higher low inside of the bullish structure, and then that's where the biggest opportunity is. That's where the biggest risk to reward is at. You know that it's bullish because you have a chart that can tell you what the trend is doing, and you just want to come down and build you a trade plan on the pullback where you can get. If you can get in at the pullback, that's the better entry, right? And so when we're talking about entry, I want you all to add the AYN indicator to your chart. If you don't have it, does everybody have that?
Yeah, I got it.
Okay, so
Yes,
you
I have it also.
okay, so you want AYN on your chart. And I'm telling you this just so you can have something that can help you to see confluence, right? Because I think we overthinking entry. Once you answer your trend questions, once you use Black Wolf and you answer your trend questions, stop thinking about the trend unless the trend has actually shifted for real. Once you understand the higher time frame trend and you did all that, we're not talking about trend anymore. We know that we're in an overall bullish trend. And when you understand that you're in an overall bullish trend, your pullbacks are your end. So you just look at this stock. We're in an overall bullish trend. So when it came down to the 200, what was that? It was just a entry for a bounce, right? We pull back here. Now we pull back again here. We already know what the trend is. We pull back. This is your opportunity. Even AYN knows. Look at this. Buy signal at the support. Pull back in a bullish trend. You're just buying at the higher low market structure, right? And you're bouncing out of it. All right. So because we know that, you want to get when you're doing a trade plan or you're looking at the trend of a stock, when you're doing your entries, to minimize your drawdown, you have to enter like you were day trading to avoid having big drawdowns. So when I see even if I'm going to hold a stock, I still enter as if I'm day trading, even if they long-term contracts. If I see this thing is about to break out and I have a level 3 candle, right? So this is a level 3 candle right here. If I get a level 3 candle, I'm either gonna get a pullback entry or I'm gonna get a breakout entry. So either the next candle is gonna close above that high, or a candle gonna close above the high of this candle to break me out, and I would have to play the breakout entry. Unfortunately, I prefer pullback entries, but I will play a breakout entry if it's breaking out. But it's either gonna close above the high of the level 3 candle. But if it closes up under the low of the level 3 candle, it's just gonna pull back to give me a pullback entry, which I prefer. And then I can enter my calls. I'm like, now I want y'all to hear me clear. It gave me the level 3 within the bull trend. It's either gonna close under the low of the floating candle and give me a pullback entry. But I know that when it pulls back down to support, I'm buying my mind. I already know I'm buying calls. I'm not questioning whether I'm buying puts or calls. I could play puts on a lower time frame as I'm pulling back to support. However, my goal is to get into calls to play the trend of the overall trend of the stock. You get what I'm saying? So even if I drop down to the lower time frame and play puts, I know that I can't stay and live inside of puts. I can play puts, but I can't really live in puts in this scenario. So if I get like some pullback to support, I'm still looking for the pullback scenario to get to a support level. So let's look at so when I'm entering into stocks, I'm mainly entering on a 3 minute and the 5 minute time frame for the most part. So if I look at a stock, let's pick a stock right quick, like a SPY. Do any of y'all trade SPY, or y'all trade other stuff?
Yeah, I've been trading QQQ as of late.
Do you be trading it with hustle?
I try to.
Okay. So look, when you're trading and trying to enter into a stock, the only thing hustle doing, and the only thing I've taught her how to do when she's getting her results and stuff like that, when you're trying to enter into a stock that day, right after it's met your confirmation, you understand the trend. First and foremost, you have to understand the pre-market high and low. You got to understand when you're in the pre-market high and low, especially look at QQQ had a crazy range for their pre-market high. Let me go to the 30 minute to grab it right quick. But you have to understand your pre-market high and low to get into your stock. Um, if you're going to try to get enter in without minimum drawdown. So when you look at your pre-market high and low, you'll know when the stock is going to be stuck in the range or not. So look at QQQ had this huge range, and I'm just going to isolate it for a second so you all can see this. Let's just turn off some stuff. All right. So when we're looking at QQQ or any stock for that matter, the lowest candle doing in this little yellow beige little phase right here. This is the low. This is the highest candle. That's gonna let you know whether the stock is gonna break out or not. So I'm gonna grab the low of this candle and I'm gonna go up to the high of this candle, right? And I'm just gonna grab this box and drag it across, right? Now, when you see a stock have a huge pre-market session like this, 9 times out of 10, the stock is gonna get stuck in this range. What does that mean? That means you will have to play this range if you're gonna play it during the day. So pretty much when price pushes down to the bottom of here, it's going to be a support level. If you break under it, that's when the stock is really bearish, right? To have a big breakout, you have to break above the high to break out. But while you're playing inside this range, that top level is going to be where you will exit at and things like that. But you can go to any big move in QQQ and look at their pre-market high, pre-market low, and you'll see that's pretty much the breakout. I'm gonna take the WTMA Cloud out right quick. You can see their breakout range, where the stock can break out, where it's strong, when it's weak. And so if you look at a trade plan for day trading, you will see the activity, what I'm saying, around their pre-market high and low. So all you're doing is going to extend it down here and you're grabbing it. You got to be on the 30-minute or lower because the 1 hour, the stock market opens at a half hour, like 8:30 for me because I'm central, 9:30 for some of you or whatever time. But, it opens at, 30 minutes, 30 minutes or whatever. So you try to get an hour pre-market high low, you're gonna throw your whole range off. So you got to be on the 30-minute chart or lower to get the accurate pre-market high, pre-market low, because the pre-market session ends at, you know what I'm saying, a 30-minute mark, right? But you can see, like right here with QQQ, when the session opened, you know, we were breaking above pre-market high, hit a target, then we crashed out. It bounced at the pre-market low, bounced again. It took a while for it to open and close a candle under it. It did right here, and all it did is consolidate it over and touch the 12, and then it dropped, right? And so, and pretty much, you can, all you got to do is know this information. And when I say information, I'm talking about the lowest candle in pre-market and the highest candle in pre-market, which is this one. If I go here, we got the breakout. We broke above pre-market high, and we held the 12, and the whole session we ran straight up. But we knew the stock was strong because it was what, above the pre-market high. All right, and then the range was not a humongous range, so it wasn't stuck being range bound. We come over here to this other session. What's the highest candle? This is the highest candle here. Let me grab a box. This is the highest candle here. And the lowest candle is that one right there. So I'm gonna draw the range around here. Right there. We open the session, breaking under the pre-market low. We never got to open and close candle, but we did test that bottom range. And we end up breaking out on the I don't know what I just did. Anyway, we end up breaking above it, got to open and close candle above the pre-market level, and we pushed up. And we held our little, you know what I'm saying, our little momentum on a pre-market session. But this is one important thing that you want to know when you can kind of jump into a stock when it has strong momentum. It's hard for a stock to just get beat up bad when it's maintaining the pre-market high and it's above the 12, and then you got your WTMA supporting and stuff like that. High chance that price will get accepted and continue to press up toward a target, right? All you have to know after that is your targets, right? So you look at, I just grabbed a pre-market session and all these examples, and you see how price struggles under it, and you see how price, if it's stuck inside the range, it's kind of just stuck in there a little bit, can't break it. So you had a compressed day where it just was kind of boring, right? But breaking above it and below it, that's when you kind of get your, best follow through, up or down, right? When you understand that range. And so when you're playing that range, I use fair value gaps. I use open and close candles above pre-market high and low. And you have to get used to trying to pull. You got to get used to once you're above a price and the price closes above it and it starts holding, to pull your trigger and set your stop loss, because if you keep thinking during execution, you can't enter the trade. I'll say that again. Once you see your trend is aligned and you see that, okay, this is you got an A plus trade range, and you done all that work, and you understand that, okay, from here to here, it can get from here to here once it starts holding pre-market range, the pre-market range, stuff like that. Once you get into execution mode, you have to turn your thinking brain off, because you'll be thinking and the price just keep going up. And by the time you pull the trigger late, you're in the stock is in the exhaustion phase where it's going to try to come back down just to make a higher low. But because
I
psychologically,
swear that's me every time, man.
because because psychologically you done thought half of the move away, when it comes back to make the higher low, you're like, man, now it's turned around against me. And then it comes in and puts a higher low in, and then it continues to bounce up, following the bullish structure that it has to follow. And you like, bro, it's like as soon as I get in, it pulled back, because you thinking during execution. When you do your thought process, once you get your triggers and stuff lining up, pull the trigger. A lot of times you will shock yourself. You could be in that trade for 3-4 minutes and make your money and be done for the day. But you're thinking so much during after you got confirmation. That's why Black Wolf design think, execute, then evaluate. You already think, you know the trend, you see the confirmation, you see the breakout. You got to execute and then live with the result after execution. Once you execute and then it push up, say you make some money, then you say, okay, let me evaluate what happened. So I jumped in right here. I let it hold above pre-market high. It opened and closed the candle. Okay, and when it did that, I was above the WTMA cloud when it did that, and I was above the 12 and the WTMA. Okay, and then it pushed up, and even though it pushed up and it hit a target quick, it kind of pulled back after that and just started consolidating. I bet. So you made your money, or it pulled back, or your timing was off. Go evaluate it, and the sooner you keep going into that little hamster wheel. Okay, I thought about what I'm gonna do. Then I did it, and then I went back and journaled exactly what I did. And then you just start cutting, and you just slowly start cutting out. Okay, when I did it this way, and I timed it that way, and I waited too long, or I did this. As you keep doing that and put exactly what you did into the trade back into Black Wolf and evaluate it, you just gonna turn it to what hustle is now. Like hustle put a trade plan out there, and you're like, okay, next thing you know, she up 200%. She's literally follow. I follow. Sometimes I'll just go and follow one of her trade plans just to follow one of her trade plans. I do that with everybody when they put trade plans in it, or they say this type of scenario. I do that with JW. A couple of people. I go follow their trade plan and just see how accurate the trade plan is in case somebody else follows it. If you just execute and put your stop loss in, uh, most of the trades I win them. You know what I'm saying? I win most of the trades. I get out of the trade. And then that is that. You know what I'm saying? Like, but if you're constantly thinking and flipping through the chart doing execution, you're just gonna keep missing the moves and arriving late. You understand what I'm saying? So that's what your stop loss is for. You're not gonna win every trade, but we have the tools to put us in a winning position from a technical perspective. We can't control when global events happen and stuff, stuff like that happen. We can't control all that, but from a technical perspective, you will know when something is technically aligned to produce a result. Okay. Now, I don't want y'all to ever sleep on this WTMA in agreement with that when that candle gets over the pre-market high. If you have this WTMA on your chart, this thing will really, really help you because if you pay attention to us breaking above pre-market high and continue up with momentum, you will see one thing is true in most of those cases. That WTMA cloud is underpriced. And when you get a pre-market move and you trapped inside of the WTMA cloud, it's already going to show you getting compressed ahead of time. So I pay close attention when I'm giving y'all call outs. Sometimes I call somebody to go and take off and stuff like that. I'll be looking at the position of the WTMA cloud, and if that position is off, if it's not in agreement with the stock, like look how QQQ is moving now, in post market, even in post market, look at it. Look at it. Look what this price was just doing at the top of the WTMA cloud. Sweep, sweep, rejection, 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 compression, right? They compressing right here. And then as soon as it do what? Get on the top of that cloud. Now it is free like a bird, right? This is true when you're going down them top mover things. When I'm looking at these, man, the first thing I'm looking at, as soon as I'm flipping through these things, shit, this thing compressing, ain't ready. Let me see. Oh, okay, okay. We got some compression on Oracle, and look at it after hours. Boop, free as a bird. It ain't trapped inside of this WTMA cloud, man. Like this thing is like serious business. And so when you start paying attention to that positioning, breaking through this thing, getting above that WTMA cloud, your little stocks can kind of have some freedom to move, and you will see it. So you will see that positioning as market is trying to open, man. Like pre-market, you'll be looking at Dell, and then you will see that WTMA cloud is green and price is just sitting comfortably above it, and then market will open up, and then even if price tries to push down, it's not going to be able to push down and just slice through it easily, right? The reason why it can't is when you really look at the WTMA cloud, which I'm going to show you why. Okay. The reason why it can't is like I said, this is what it really looks like. See that? And so if I zoom into it, look what's happening at each one of these WTMAs. Bounce, rejection, stop, stop, stop. And so when you get a tight WTMA, like I said, it's making a big arc, almost like you're throwing a cast net. This thing is like a moving bearish order block on the chart. You're not breaking through it easily. When you get trapped inside of it, you're literally hitting constant resistance. That's why it compresses price so aggressively. And that's also why expansion happens once you leave out of it. So when you get trapped into this thing, just like I said, right here, the WTMA probably just made an inverse arc right here. And now the WTMA cloud has made a what? Multiple inverse arcs to support that first early entry. And then you have parabolic price action because of what's happening inside this thing. That's why when you get inside of it, you're compressing. When you break out of it, it's like it's like getting it's like getting one, two, three, four, five, six inverse arcs to confirm a big move. So that's why I call it a parabolic indicator. When you break out of it or you break above it, it leads to those big giant moves in the stock price because of how it's coded, right? And so when you understand that what it is, you will understand like it can filter out what you need to what you don't need to waste your time on and what you need to waste your time on very fast. Uh, because when you breaking out of your pre-market range and you start mounting that WTMA cloud and you got your regular WTMA and everything kind of supporting you, you can push to those targets, pretty easily. You know what I'm saying? If you fighting against the WTMA and the WTMA cloud, you can tell which stocks are going to struggle. You know what I'm saying? Like SpaceX, struggle, 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 struggle. Look at here. Held above it all the post session, all pre-market. Man, when that thing opened up, parabolic. This is our parabolic indicator, bro. Like, and the crazy thing is this: when the 12 cloud crosses this thing, it's a huge, huge momentum boost when the short term trend gets above that WTMA cloud. And so this is why the Discord 2.0 alerts that I'm working on for you guys under this private alerts tab, if y'all hadn't started using it, when you come in here, guess what's in here now? If we come back, and these are printing during the day. A lot of these ended the market, but like right here, for example, 12 cloud crossing the WTMA cloud. We have this alert in here for multiple time frames: the 4 hour time frame, the daily. We got, and then like we was talking about the AYN buy signals. That are how strong they are. You have 4 hour buy signals. You got daily buy signals that's teamed up with AYN. And so you're getting these signals in here so that you can know what to focus on. Like this right here, XLY has a 1 day chart, 12 cloud crossing the WTMA cloud. So XLY is what is that? Consumer discretionary. So that means that's the ETF that Tesla and all them boys are in. And so you want to start paying attention to these alerts because now we're alerting when you're getting these 12 cloud crossovers and things like that. I think Coin just got one. So you want to pay attention to it basically. So we had these alerts in here for when that event happened. You got buy signals in here on different stocks and stuff like that. So make sure y'all paying attention to these alerts because when you're building a trade plan, so it's two sides to what I'm doing. One side is, okay, Shon, find what's moving, find the important stocks to focus on so that we're not building trade plans on 3,500 stocks. So a lot of the indicators that I build are in that bucket. What do the screeners find some stocks to trade? The alerts find stocks to trade. That's all we're doing is trying to find some stuff to trade. And you just have to be smart enough to understand what an A plus trade looks like. Just like when we stopped on Deere's chart, I was like, oh, this is an A plus trade. It already cleared out the order blocks on top of it. It's pulled back down and it's going back up to make a higher high. That's an A plus trade, right? And so with these, like right here, you have even some candlestick pattern. Let me see. This is like this right here. What is this? What stock is this? Enphase. Okay, I forgot the name of that stock, but it has a weekly bullish engulfing candle. That's a good, so that's a good. If the location is good, so a bullish engulfing candle means is that's a big candle, but we need it to be at a good location. So it's a reversal candle. It said it happened on a weekly chart, and so let's see where did it happen at. So it happened after the sweep, right? So it happened after the sweep. It happened, and then we're going into low VRVP nodes. It's already trying to push up in the overnight session. Got a buy signal on it as well on a weekly chart. So let me see if it's an order block on here. I accidentally took my wolf chart off, but we'll see. You know what I'm saying? If it has a, and it happened at an order block. So this is a good signal. You know what I'm saying? Like you had a first retest of a bullish order block. You got a bullish engulfing candle after you got this test, and it's gonna try to push. That means buyers stepped in very aggressive. You got a weekly time frame bullish engulfing candle. We can see already ahead of time that it's finna push up and try to hit 47 or whatever. But the money, the easy money, is gonna be from here to the top of this WTMA liquidity level, and then after that, it's gonna try to push right to this liquidity right here. All right, and they got a little bit of ways to go all the way into October. They must have had good revenue, yeah. So they got good revenue. They had a slight miss on earnings per share. But these are the type of stocks when they drop like this right here, and you get a bullish engulfing candle. When you're trying to play earnings for something like this, so look at this. They beat earnings right here. They beat earnings right here. They beat earnings right there. And look at this also. It was in a strong downtrend. They got a change of character, break of structure. They came back in and doing what? Put in a higher low, right? So if I was gonna play earnings on them, these are the type of stocks where you can buy a contract that expire November or like December and be already in earnings for them for next earnings, like for their up and coming earnings. Because before earnings, they're gonna try to push this thing all the way up here because all they did was missed on earnings per share a little bit. And then I will come down here and look at the little grid right here. Their revenue came in about almost flat. Earnings per share came in about flat. And then you always want to see kind of what price target they got on. So I only got a 45 price target on them. So, but it's still a good position. It's like these are the type of scenarios where I like to play earnings because I see them coming out of a extremely bearish downtrend, and the location makes sense. Like you had a weekly demand zone, you got a VRVP just kind of just going away. The higher it goes up, so you would be in this type of scenario by the time you look up, right? So they be earnings over here. You already in position at this weekly demand that they may not come back to no time soon, and then you'll be already having your shares or your play. Okay, but I don't want to hold you guys too much longer. I know we over time. Um, I'm gonna give you all this recording. Does anybody have anything for me before you leave? If not, we can dismiss for you all can have the rest of your night back. And
Real
I'll
quick before you go, can you explain the level three candle that you was talking about a little earlier?
yeah. So a level three candle is always going to be. It's always going to include a trend line. Okay, so that's how you know when you add a level three candle. So let me come back here right quick. All right. So when you're dealing with a level three candle, it's always going to include a trend line. And so we got our regular wolf chart on the thing, and let me see, Wolf Levels Pro, which has your trend lines on it. Wolf Levels Pro has the trend lines. And so when you're dealing with a level three, oh, all right. So your level three candle is always going to be the candle under the trend line. It's going to always be under a trend line, okay? Under or above a trend line. And so this candle right here, the first candle that opens and closes under the trend line and under the 12 cloud without the wick or the body of the candle touching it, that's the level three confirmation. Other thing that had to be true is that you need to be under your 200 and under your 12. So you got a red 200 and a red 12. And then you get a candle that opens and closes with the wick of the candle and the body not touching the trend line or the 12. Okay. That's your level 3 candle. So the reason why it's a level 3 candle is because it is a continuation momentum type candle that happens at the final, like as you go into that final leg of a trend. This is a breakout. So you get your early entry, you losing the 12, but then when you break under this trend line and hold under it, that's the level 3 breakout. So you always see that confirmation, like right here. You see how this candle right here is above the 12. Now the difference between this one is we're under the 200, right? So this is what you would call, like, when you're doing like a counter, you're trading against the trend. So this is like a counter trend version, but a bullish version of that, a true level 3 bullish candle. Your 200 will be yellow, your 12 will be blue, right? And then you would get your level 3. So like this candle right here is a level 3 example. Let me show you. All right. So right here, we got a yellow 200, we got a blue 12, and then you see this green trend line right here. Because we in a bull, we got a long-term trend is bullish, our short-term trend is bullish. Then when we get this candle right here that opens and closes with the wick and the body of the candle above the 12 cloud and the trend line, and it didn't touch it. It didn't touch either one of them. This is the confirmation candle from a level 3 bullish perspective. And so you see how after that candle, even though we pull back here, you still had your momentum breakout. But this is the level 3 because, or phase 3 of the trade. Right here, you have your WTMA, your candles locked. That's your early entry candle. That there another institution is coming in, so you can play the high and low of this candle and enter in with the WTMA. This is the early entry, so this price is way down to $22, $24. Then the second phase of the trade is when you recapture your short-term trend. That means that your 12 has turned blue. So you have your short-term trend recaptured here, and so that happened really within the same candle as the lock candle. So you have a trade from here to your trend line. Then if you miss this right here, the other responsible entry is when you break above this bearish, well, this not bearish, it's a bullish trend line because it's green. But what I'm saying bearish is this trend line is resistance, diagonal resistance. So when you break above this with an open and close candle, that's your third entry that you can take in this trade to take it up for the last little explosive move. You see how after we got this entry, it was a bigger, more explosive move up. But you're just trying to play it to your first target. So this target here would be in a good exit target, or this wouldn't here. So this line here would be a good take profit or a level to put your stop loss. Definitely here, you would be out of that trade. So the interest, the confirmation system is designed for you to be able to enter at different stages of the trade, right? So every time you're not gonna have a trend line. So like here you got a inverse arc entry, you got an inverse arc entry, and you don't have a trend line yet. So but the WTMA allows you to get more entries. The 12 cloud allows you to get retest entries. The level 3 is just, you see how we got a trend line here, but we've been kind of pushing up since we got that trend line break. Right here, you see the same thing. We still above the 200 cloud. We got this trend line right here that's going to act as diagonal resistance. So you see how we don't play crossing the trend line. We look for a candle to open and close above it, right? And so here we reject it, reject it, reject it. All these rejection candles, none of them are open and close. But if we zoom into this candle right here, you see how now we got our trend line here, this diagonal green line, if you can still see it. But this candle right here opened and closed above the trend line and above the 12 cloud without touching either one of them. And then you have your 200 is still bullish. So that would be your level 3 confirmation, your floating candle. And then you have really strong support as well because you got an inverse arc. And so we call this a confirmation stack. So you got your level 3 plus an inverse arc at the same time. And then so that's how you get that momentum entry. You kind of you understand?
Yeah, yeah, yeah. I'm getting it.
Yeah. So you just the level 3 or the phase 3 candle is just extra it's just showing you that momentum entry. And just simply you just looking for a candle that open and close above this trend line and above the 12 without touching them. That's it. And you just that's that important candle for this part of the trade. Uh
And
all
this
the
this this should work like on even like on like basically any time frame that we looking at it on, or would you say
Yeah,
you would be better off looking at it on the bigger time frame?
no, it's all so the confirmations they work on a they're not time frame specific. You use the time frames to know how long you can be in a trade. So the lower the time frame, the quicker you got to be out of the trade. So like right here, for example, look at the same behavior. Your 200 is bullish in yellow. Your 12 is blue. It's bullish. So you got yellow and blue. All you're looking for is a candle to open and close without touching the trend line or the 12. You know what I'm saying, right? And so we look at this one right here. It's gonna be, even though it's kind of like it may be touching. Let me see. Let me zoom into it. Yeah, so this counter right here would be your level 3 confirmation counter, right? So you above it without touching it, right? And then you see how it leads to the same type of breakout scenario, right? Breaking down, same thing. If you play a level 3 candle, which would be this green candle right here, if you play this candle and you're above your 200, you have to exit at the 200, right? So if I got into a trade because I was under my 12 and I wanted to play a down move and say I missed the inverse arc back here or I didn't get in when I lost a 12 back here, my third opportunity to get in would be under this trend line break to push down and exit here at this candle at the 12 cloud. Even though it pushed down more, because I'm above the 12, I have to exit at the 12. I mean, because I'm above the 200, I have to exit when I hit this yellow
I got you.
because it can bounce on me, which it did. It pushed down, but very quickly after it, it bounced. Yeah. So you have early entry with the WTMA and you have that short-term trend reclaim, like when you play in the 12 cloud, which is the blue. You can enter when you get back. When it's blue, you can enter on the retest of it where it's blue. When you pay attention to the color scheme, it really help you. Like when the 12 turns red, it's saying, all right, for the short term, we're pulling back. But overall, the long-term trend is still bullish. So the 12 is going to pull you back down to the 200. When when the 12 is blue, not when it's red, it's trying to pull you back. When the 12 is blue, when it comes down for your retest, it's trying to act as support, especially when it's sloped up, when it's pointing up like this right here, and you're pulling back down to it, it's trying to keep you in the uptrend, right? And so overall, when it's yellow, if you just zoom out and just look at the color scheme, what do you notice when that yellow is red? When this yellow right here turns to red, what do you notice about the stop price?
It's pulling down.
It's pulling back because it's telling you ahead of time. I don't care. You can go down to the 30-second chart. It don't really matter what chart you go to. If that yellow cloud turns red, uh, you in a downtrend. We're on a 30-second chart now. Look at your trend line. Same confirmation system. I don't care how far you go down or how far you go up. The trend is gonna be the trend, and the confirmation system gonna be the confirmation system. Even if I go to the 1 month on the chart, it's still gonna be the same confirmation system, and the same things are gonna mean the same things. Like this stock too new, but right here we cleaned onto the 12 until we lost it and it turned red. He was in a deep downtrend the whole time. While I was above the 12 and it was blue, he was in an uptrend. So blue is bullish, red is bearish. Yellow on a 200 is bullish, red is bearish. And when you just pay attention to, red 200, the stock bearish. When you got yellow and blue, the stock is bullish. You know what I'm saying? The stock is in a bullish trend, right? And from the 1 month to you can go to the 3 minute or whatever, those things would not mislead you in regard to when they're having confluence with each other. When this thing right here, when the stock price is holding above it, especially when the 12 is far away from it and things like that, it's it's gonna always be the same. It's just your 200 cloud is just going to let you know that, okay, you overall in the bearish trend. When you're under that 200 and the 12 is turning blue, these are just short pops up, but more so put opportunities for the next leg down. But when you're 12, when this blue gets back above the yellow 200, when you see that crossover and you start seeing it hold above it, that's when your trend is really reversing. It's not about the candles, but pay attention to where the clouds are. When that 200 is red and then the 12 goes under it, you start holding in in that bearish trend. Same thing when it gets back above it, you start reversing your trend back up. So when I'm saying when we answer the trend question, your eyes, one thing you should be getting used to, or you should always try to get used to with the wolf chart is if you open your chart up and the stock has a red 12 and a red 200, your brain should automatically say, okay, this thing is the trend is bearish. Okay, we in over, especially if it's on a 1 hour, 2 hour, 4 hour daily. When you get to those higher time frames and your trend is bearish on the higher time frame, or that 200 is bearish on the higher time frames, the stock is bearish. So anything they try to pop it up short term on the 5 minute stuff like that, it just look they're gonna just try to short it again. But so like right here with MU, for example, it pops up sometimes, right? But it's under that 200. So every time it pops up, it just sells back off. When it pop up, it sells back off. And so until that 12 gets back above that 200, and it's got to start at the 1 hour. When you see that 1 hour 12 start holding back above the 200, and you start seeing yellow and blue like this, you start seeing a yellow 200 and a blue 12, that's when it's really going to reverse. Until then, these are just making higher highs, higher low, higher high, higher low. It's just in a downtrend because the 200 is bearish. So it can't do nothing until it get back to that 12, get back above that 200. That's when it get in this range, you're going to see it cross over. You're going to see it do this right here. It's going to do this exact thing that it did here. It's going to cross over the top of that 200. That 200 is going to flip yellow. That 12 is going to remain blue. When that happens, MU is going to move from 930 back to almost $1,000, and it's gonna happen within 2 days. Quick, boom, it's gonna pop. But until then, it's just gonna keep rejecting and drop until it cross over. Now, when the candles get up here, when the 12 gets up here and crosses back above here, that's when it's gonna pop and go up and hold. And we'll know, okay, the trend is trying to shift and reverse, right? And so that's why that's your trend detection, and then the other things we use for entries and stuff.
Gotcha.
Yeah. Well, all right, fellas. Y'all get with me in the Discord. We're gonna let this video download and I'll send it to you guys, okay?
Appreciate it, man.
All right, no problem.